Welcome back, everyone, to Sum Zero. Today we are reunited with Jan Martínek from Central European Capital Partners. If you recall, I think it was about 18 months ago, Jan had discussed a company called ERII on Sum Zero. And we wanted to first just do a little bit of a look back on how that investment idea is done. And then later, we're going to talk about two other names that are in his portfolio. So with that, Jan, if you could give us a quick overview of like how ERI did. That was a big long of yours earlier last year, and I know it's performed quite well despite the fact that markets were struggling, quite a bit in 2022. Obviously, recovered somewhat in 2023. But give us a summary of how that thesis played out.
It has. Well, thank you very much for having me. On energy recovery, I think the company returned about 35% in the last 18 months, and at the time it was high conviction story, and today, it's even more high conviction story than it was. Energy recovery, it's $1.4 billion US market cap. They have $100 million in cash, zero debt, 75% gross margins. And they own global desalination market. They have a technology called pressure exchanger. And with that, they haven't lost a contract for major desalination project for about 7 years. And what we like about this is that they have managed to disrupt one industry, which is desalination now. And now they're just taking the same technology and copying it into another industry. And the another industry is much bigger than the current, and that's industrial refrigeration and air conditioning. And when we spoke 18 months ago, they just introduced the product and they started to present it in different fairs. And 18 months on, the product is now being sold to the major producers of industrial air conditioning, and they are starting to implement those in the product in the supermarket chains. And there is 100,000 supermarket chains just in the US, and they will all need to change their refrigeration in the next few years, and many of them are doing it now. So, and that's happening globally. So I believe we will have very strong revenue growth, and it's just now starting. So the 35% is great, but I believe, we could have much more in the next 2-3 years as the product will start selling. And I think at some point, once it is put on the major producers' selling list, everybody will take it because it costs nothing. Because whatever the energy recovery device costs, is the whole system is lowered by even more. So the system with energy recovery is actually cheaper than without its device. And the cost saving in hot area is 40% in energy cost. And energy costs for supermarkets are 50%. Refrigeration is 50% of energy costs for supermarkets. So for supermarket, it's just so simple investment proposition. So I think it's something which people should look at, because it may be the only ESG company which is heavily profitable, saving the environment and making money for its investors. So
yeah. And the stock right now, I think, is at around $25. You're looking for this to, I'm assuming, double from current levels. Do you have a time horizon for that?
I think at some point the revenues should start growing very strongly. And I don't know, it could be later part of this year or it could be next year. So, but when that happens, the stock could easily double. So by the next year, it could be easily $50 stock.
Yeah. Well, let's move on to some other names. You are a European markets expert. I know you cover a lot in Sweden. So Let's talk about some of the other names you've written about on SumZero recently, Biovica being one. Maybe we start with that.
Biovica is a very interesting company because it is a disruptive product. Energy recovery is disrupting desalination, is disrupting air conditioning, and Biovica is a company which is disrupting the way cancer is treated and monitored. For decades, cancer was treated through surgery, chemotherapy, and that was how most cancers were dealt with. And now we'll see in the next decades rapid changing the way biomarkers are used for the way cancer is treated, monitored, and dealt with. And biomarkers are basically molecules in everybody's blood in which you can detect what's happening with the cancer, how aggressive it is, whether the treatment is working. You can do specialized treatment for that particular cancer trend. It is something, there is a very interesting recent article on Bloomberg called Biomarkers Are Rapidly Changing the Way Cancer is Treated. And it all describes all the ways how biomarkers will change the way the cancer is dealt with. Biovica is a Swedish pioneer in the area. And within this biomarker segment, they are only focused on cancer testing. And they have the first ever FDA-approved cancer test, which then basically detect whether the way the cancer is treated, how is cancer progressing, and whether the therapy which was implemented is working or not. You can do that through conventional ways, through MRI. So basically, you find that somebody has a cancer, you do MRI, then you give them medication, you wait 3 months, and after 3 months, you do another MRI, and by MRI, you find out what's happening with the tumor. Biomarker tests can do that in 2 weeks. So within 2 weeks, you can find whether the treatment is working or whether the tumor is progressing further. And so it's faster. If you compare it with the average detection period, it's at least 60 days faster and 3 to 10 times cheaper. So, and another advantage is that it is so easily detectable. You just need a laboratory, just need to take the blood sample, send it to a Biovica laboratory, and in 2 weeks, your doctor knows what is happening. Biovica has, because it's novel treatment, you need a lot of evidence and support that it's working. Biovica has 28 studies with over 4,700 patients, and the studies were done in the best US and European hospitals. You have Mayo Clinic, you have Johns Hopkins. Basically, the best people in the industry have done testing of this technology, and the accuracy is very high. It's 96.7 over 30 days and 93.5% over 60 days. So it's fast, accurate, cheaper, and now it's in the market. Biovica got FDA approval mid last year, and then in early this year, they get certification for the US lab. And now they are in the market. They have a dual sales strategy. For the US, they have hired very experienced US team which is working with is initially focused on the big hospitals where they have done the studies and where they know the products. So I understand that the sales in those hospitals are already happening. And in Europe, they are trying to sell through partners. They have already announced first partnerships for selected markets in Europe, and it will follow. Biovica has been one of the COVID victims because they were just about to receive FDA approval when COVID hit. And FDA focused on COVID-related treatments, and everything else got delayed. And in Biovica's case, it was almost 2 years. And investors lost patience. And just before the COVID hit, Biovica was trading at 8 times higher market capitalization than it is today. So now what will happen? Another thing which hit Biovica was that they had to raise capital late last year in a time when the panic was high. And of course, the conditions were draconian, and that helped. That also pushed the stock where it is now. It has been stable since. What was very interesting on the latest capital raise that the CEO.
So what is the current? Can you just go over the basics, like market cap?
I think the current market cap would be about the current market cap would be about $30 million. So it's a very small company. What's interesting on the latest capitalization is that the CEO has invested $1 million of his own money. So you have a company which has a market cap of $30 million, and investor and CEO is putting his own money at the same valuation as any other investors were asked to do. So that was quite encouraging. What is also listed in Sweden, and it's covered only by the Swedish brokers. So it is unknown to US investors. And once as the sales will be progressing, I think that it should get on the radar screen of many. Pareto, who is in my view, one of the best research outlets or brokers and research in Scandinavia, they estimate that the annual revenues in 5 years should exceed $100 million. So the potential there is significant. So you have a product which is disrupting, but it is a new product. So the only question is how fast the market penetration will be. How quickly it will be able to penetrate into the market. The value proposition seems to be very clear. In cancer, time is important, and this can just get you the results. If your therapy is not working, you have a chance to quickly change to a different therapy. And what's also interesting is that at the moment, the first product is breast cancer, which is the most common cancer form. But they have multiple studies on other cancer forms, and these are not priced in. So once the breast cancer gets into the market, we will see other types of cancer form tests, and they have no competition. They are the only one. They are the first ever FDA-approved biomarker test, and FDA statements, according to Pareto, was quite strong on the approval. So I believe it could be very interesting company to follow. The share price will move on the revenue. So if they report quarterly strong revenues, the stock price should start moving strongly. And
how much cash do they have left on the balance sheet?
I think they are fully invested for this year.
Are you saying they have no cash on their balance sheet? What's
No,
the?
sorry, they have enough cash to cover this year comfortably.
Got it. So do you know what their plans are in terms of fundraising and how it might impact the share price? So what are they doing to build kind of longer runway?
It is all function of how quickly you want to penetrate the market. So because the major cost is the sales team. So, once they see that the sales are picking up, then they can raise capital and increase the number of sales representatives, and that would increase that would make the revenue growth even faster. So, but on the base case, which is staying with the current sales team, which may be sufficient because at the moment they are focused on the big cancer centers, and like Mayo Hospital and the big clinics, and for that you don't need that many sales representatives. And once you get established in those, the smaller clinics are trend followers. If they see that Mayo is doing it, why wouldn't you do it as well? So I think they are. I would assume that they are secure. They are definitely secure for the next 12 months, and then they will need to raise.
Yeah, it's an interesting bet because it's sort of a venture capital style investment. Is this something unique in your portfolio where you've got kind of a, let's call it an earlier stage, like higher risk, higher reward type name in an otherwise value-driven portfolio?
We entered in energy recovery when it was, I don't know, $5 stock. So, at this stage, it's not major position for us, but the potential is material. And so it is a long-term investment, which we will stay with. It's not a trading position. So it is something which you can make a lot of money over 5 years. If you're looking for a transaction that should make you money in 1 year time, this could be it is as well if that the trades pick up, the sales pick up quickly. But I think mainly it is a longer term game.
Very interesting. Tell us about Vicore Pharma.
Pharma, I would basically call it's even earlier stage than Biovica. So again, it is a high risk company, high return. I would basically, the biggest opportunity there is that it's not listed in the US. Because if it would have been listed in the US, it would be trading at 10 to 15 times higher valuation than it is now, as are its peers. So basically, Vicore is a Swedish clinical stage biopharmaceutical company which is focused on IPF, which is idiopathic pulmonary fibrosis, basically lung disease. It is a disease. It is a disease for there is no cure. There is several medications in the market, but none of them can cure you. And the average duration of medication is about 5 years, and then people die. So where is Vicore different is that there has been no other company has shown such a results as Vicore in IPF. Vicore is the first ever company which shows results that can cure IPF. And they show it 12 weeks, 24 weeks, 36 weeks. Each readout goes and reconfirms the strength of the data. The company is trading in Sweden, Germany. It is covered by, 7 Norwegian brokers. They have it all as their top pick. I like the latest research was by Pareto, which was titled "And Notice Potential Multi-Billion-Dollar Drug in the Making." So everybody is saying this is unheard of. They just presented 2 weeks ago. There was the biggest conference on IPF in Washington, D.C. And they presented the data there. And again, people were, the key opinion leader said that the results are just unprecedented. And so for anybody who wants to look at this study, I recommend to watch their presentation, which is on their website. It was released, I think, 10 days ago on Friday, which goes over all the details and which has the key opinion leader and also presenting part of the presentation. What is interesting is that if you look at the US peers, they trade somewhere totally different. And the best peer is Pliant Therapeutics. It's $1.4 billion US market cap, while Vicore has about $150 million. So Pliant trades at 9 times higher valuation than Vicore. And despite that Pliant numbers show positive results only for the first 4 weeks. And then the drug shows decline in line with placebo. So the Pliant drugs work just 4 weeks, while Vicore shows after 6 weeks stabilization and after week 18 material improvement in the lung disease. And it is in 21 there were 2 drugs that again much worse results than Vicore, and they sold for over $3.5 billion Pareto reported. So
is the management team, what are they doing to close that valuation gap? Like, what's the catalyst?
I think they are trying to get to the US. They're trying to get out of Scandinavia, because the main difference is just the listing. In Scandinavia, it's a small market, and I think that the next step is, of course, they need to deliver. So they are starting now. They announced 2B study, which is FDA endorsed, which means that if the 2B study would confirm the results which they saw in 2A study, then they could ask for accelerated approval. And that's happening next year. The 2B will start early in 24. And if they would show the results that would hold up, this company will be taken over, or if they can get FDA early approval, they would start the licensing. It will be a multi-billion-dollar company. And it is, again, while Biovica, it's also top idea from these Scandinavian brokers. It could take longer for Vicore. You could be there during the next year or year after that. If the results will hold, and they will be they report these readouts periodically. They don't wait usually until the end. They start reporting after 12 weeks. Then that could be very strong price moves. So again, it's not a major position. It is something.
Let's talk about that. So given how these are both Biovica and Vicore are small cap companies, let's say on average 100 million in market cap. How do you size that in your portfolio? I mean, what's the is this a 1% holding, a fraction of a percent, or is it more than that?
Yeah, I think it would be less than 1%. So it is. Yeah, it is a small holding, but as I said, Energy Recovery was initially small holding as well. So of course, it is high risk. You need a portfolio of those investments, and you need to be careful about sizing. But the potential is material.
Right. And what would you say are the biggest risks to the catalysts or risk to the thesis for both Biovica and Vicore? Just these test results, or how do you think about the risk to the thesis? What kind of downside do you have?
For Vicore, the downside is that they would not replicate the 2A studies in the 2B. And I spoke to several analysts, I spoke to key opinion leaders, and they just don't, they went over the details, and they said it all looks very promising. Of course, you are never sure in this world or in any world.
Yeah.
But so far, we have been diligent. I've spoken to almost any broker any analyst that covers it. And I spoke to one key opinion leader, and I'm talking to the other in 10 days. So we are still monitoring and still trying to find whether there is what is the risk in the thesis. But so far, but we feel comfortable. But of course, as you said, it is a small company, it's early stage, it has the potential, but there could be material.
So I guess to close up, given the binary nature of the outcomes, or somewhat binary nature of the outcomes, how does valuation factor into this? I mean, do you do like some sort of DCF on what you think the future could look like for these companies, or is the future so, is that TAM so large that it's not really worth doing a real valuation? I'm just curious how you think about that.
I think it's exactly as you said it, because the unknown are so unknown that if you do a detailed DCF model, it would not bring you any closer to the valuation than the back of the envelope valuation. So you can say, you just think about, if they deliver, would they be able to get US broker coverage? Would they be able to just start generating capital in the US? Will they be able to get on the US screens of US investors? And if that is yes, then the potential is material. As I mentioned, Pliant is
9 times the value.
It's in the same stage. And it is, and I believe from what I've seen is, and what I discussed with the analysts, they will stop the study. They don't believe, at least in Scandinavia, they don't believe that they will be able to finalize the study given the results which they are showing. Of course, they could be wrong, and Pliant may come in the next stage with some stronger data, but on what they have shown, it's if you look at the Pliant CEO, I just read the article in Life Science, and he says be strategic when disclosing data. So it's I think Pliant could be overhyped. But on the other end, the two drugs which had much worse results than Vicore sold for billions of dollars recently. So back to your question, it's very difficult to value those. You just feel that based on the peer comparison, that the value uplift could be very substantial.
Yeah. I think that's a good way to end. Well, we'll be tracking all of these. These are very exciting names, and I think it's cool to see the early stage, biotech investments in an otherwise concentrated portfolio coming from a kind of a value GARP investor like yourself. Normally you would see these types of names invested by folks who solely focus on on biotech. So I applaud your ability to think outside the box a little bit, and I'd welcome anyone listening to read your research on SumZero as well. But with that, Jan, let's be in touch, and thanks again for taking the time to walk us through this thesis.
Thank you very much. Thank you.
Appreciate it.